Well, welcome everyone, and thank you for joining our Trailblazer webinar today. My name is Cheryl O'Connor. I'm the CEO and co-founder of Income Conductor, an award-winning retirement income planning technology that engages your clients in the planning process and delivers income certainty, not probability. Our Trailblazer series highlights the people in our industry who are forging new paths and developing new ways to achieve success while providing great outcomes for clients. We welcome your questions, so please type them in at any time into the Zoom Q&A box and we'll address them at the end of the webinar. So, it's my pleasure to introduce our Trailblazer webinar today, Scott MacKillop, a 49-year veteran of the financial services industry. Scott has served as president or CEO of 5 asset management firms, including Frontier Asset Management, Portfolio Management Consultants, and First Ascent Asset Management, as well as one consulting firm, Trivium Consulting. His firms have received numerous industry awards over the years, including WealthManagement.com's 2021 Wealthies Award for CEO of the Year in the Asset Managers category. A prolific writer, Scott has published over 200 articles and papers, and in 2019 won the Governance Insight Award from the Investments and Wealth Institute for his article, The Harmonization Trap. A sought-after industry consultant and mentor, Scott currently serves on the board of directors for the Institute for the Fiduciary Standard, the advisory board of WealthTech Strategic Partners, and the advisory council for Global Macro Asset Management. Welcome, Scott. I'm thrilled to have you as my Trailblazer guest. Always a pleasure when it's also a fellow musician.
Yeah, well, thank you very much, Cheryl. It's great to be here. I'm delighted and really look forward to the conversation today.
Well, we are as well. So I always like to start off asking my guests if they could share a bit about how they started in the industry. What was your first professional career? And then a brief sort of tour, the journey throughout the financial services industry.
Yeah, be glad to. Yeah, I started out in a totally different area, not asset management, but I was a Washington lawyer, practiced law in Washington for 15 years or so. I actually started as an intern at the SEC and served there. I wanted to be in the enforcement division and put away bad guys, but they put me in the investment management group that took care of advisors and mutual funds and so forth. So I ended up in a kind of what I thought was a backwater at the SEC, but it turned out to be really valuable for my career as I went forward. And then I went to work for one of my clients down in Atlanta that was a pension consulting firm. So we did a lot of asset allocation, manager selection, performance reporting for large institutional clients. Mm-hmm. And then we were approached by a couple of advisors out on the West Coast who said, could you do that same stuff for us to take to the retail market? So we thought, I don't know if we can do that or not, but let's give it a try. So we put together what turned out to be the first mutual fund based TAMP. That was before the term TAMP was even invented, and went out into the world and raised $1 billion plus in assets. Back when $1 billion was a lot of money. And so that was my first step into the asset management world, and I became president of that firm. And then we sold the firm to PMC out here in Denver, Portfolio Management Consultants, which is now a part of the InvestNet organization, and became president of that firm. That was the first platform that had both separately managed accounts and mutual fund model portfolios on it. So that was kind of a new thing at the time. And then I went off, formed my consulting firm. We sold PMC to a firm, and I really wasn't that interested in sticking around under the new regime. So I went off and formed my own consulting firm and worked for firms like JP Morgan Asset Management and Bear Stearns and Nationwide Insurance and Schwab and so forth, just helping them putting together managed account programs for financial advisors. This was back when that was still pretty new territory. And then I went to work for one of my consulting clients down in Houston, U.S. fiduciary, and we created there, I think, what was one of the very first, if not the first, platform for breakaway brokers to leave wirehouses and come, out into the RIA world, but still have the capability to do some commission-based business through a broker dealer, and also they had what was essentially a TAMP that supported their investment management business. So I did that for a while. Then I went to Frontier Asset Management, which you'd mentioned, was the president there. That was a totally different kind of experience because we started working on the InvestNet platform. This was when the big platforms now started to rise up in the world, and we did a lot of work on the InvestNet platform. I think we were the first fund strategist of the year on the InvestNet platform. And then I got this crazy idea about doing a TAMP that was a flat fee TAMP. Everybody else was charging assets under management. And especially given the way the business was starting to evolve with the technology that was there to support it, it just didn't seem like that made all that much sense. Like I could go and do flat fee and be perfectly good. We didn't have to do any more work for $1 million client than we did for a $100,000 client usually. And so we went out and did that. That was a very successful firm. I think we were 14-time finalists for Wealthy Awards, and we won 3 of them, including the one that you mentioned earlier. And then a couple of years ago, we sold that firm to GeoWealth, and then I hung around for the integration process, and now I'm as of this last January, out on my own doing consulting and serving on boards and so forth. So that's the journey.
Wow. So you spent your whole career building and leading not only successful companies, but really innovative companies. That as the industry evolved, you've been ahead of the curve. So why do you think it's important for advisors to adopt a mindset that anticipates change, which is
Yeah.
what you were doing, versus
Yeah.
reacting to change?
Yeah. Well, I think my career is really instructive. Every time I went to a new company, the world was a different world. I could never have replicated what I did at the previous company at the next company and had it be successful. The world just was changing too quickly. And at this point, it's changing even faster than it was back then. So the first answer to that question is you have no choice. You have to adopt that sort of mindset, because otherwise you'll just end up being steamrolled by the evolution of the industry. And so that's a challenge, because it means you have to think about the world differently, and you have to see things differently. I remember, early on in my career when I was a lawyer, we used to work for a lot of financial firms, and they didn't really spend any time thinking about what the future held. The world was pretty much the same every day, and it kind of every so often there was a major change. Maybe when they ended the fixed commission rates, for example, that was a big change. But those kind of changes came along very infrequently. But now they're coming along, all the time, and we're really in a state of flux. So you can't just use big building blocks of stone to build your edifice now. You have to be much more flexible and be ready to change with the times. And I think the second answer to that question is because advisors really they work so hard to create their firms and make their firms successful, and they put their hearts and souls in it. And so they should adopt that sort of mindset of expecting change, because otherwise all their work is really is going to be for nothing. They'll end up being passed by, as I said, by history. And also their clients deserve it. The clients, one of the things that's changing very rapidly about the landscape is clients, and what they want and how they operate, and what their expectations are and so forth. So I think you have to make sure you keep up with the needs of your client base too, because advisors love their clients and they depend on their clients for their livelihood, and they form very close and deep relationships with them. And so it's something you have to do for the clients as well.
Absolutely. Yeah, and our email invitation, I came across an article or a research paper by Deloitte that
Mm-hmm.
said, over the next 5 years until 2030, the change is going to exponentially accelerate.
Yeah.
And, not only client needs changing, but also technology innovation, changes in the industry. What do you see as the key attributes for advisors to adopt so that they thrive with this ever-changing ecosystem we're in?
Yeah. Well, let me answer that in just a minute. But first, it's worth just mentioning what the changes are that are going on. It's
Yeah.
you touched on them, and I mentioned clients are changing, and but the technology is changing at an incredible rate. And everybody's talking about AI these days. That's obviously going to create big changes. Nobody knows exactly what those will look like, but there's all sorts of other technology changes going on as well. And so the the whole landscape in that area is changing. Investment products are changing tremendously.
Mhm.
You can see, crypto's kind of sneaking its way into the world, one way or the other. And, there's a big push now for alternative investments and private markets, and people are creating UMA type products that combine all kinds of portfolios together. These are all changes that they're not all necessarily good changes, but they're all
Mhm.
changes that people have to deal with. You're going to have to either develop a reason why you don't do something, or learn how to adopt to the new changes. And so that's happening. The regulatory environment continues to change. Every time we get a new administration or a new leader at the SEC, there's change. And then the competitive landscape is just dramatically changing. The arrival of big money on the scene, and we're kind of getting to a point now where a lot of advisors are getting ready to pass the firms that they've built on to the next generation. So you've got all of that going on. Um, there are many more outsourcing opportunities now than there used to be, and so that's changing the competitive landscape. It allows this expansion of product offering that wasn't possible before. It wasn't that long ago when a financial advisor was, well, when I first started, a financial advisor and a stockbroker were the same thing. That's
Yeah.
that's how long ago how much the world has changed. But now, it wasn't even that long ago where most advisors were investment management firms. Now
Mhm.
they're financial planning firms, and they're adding estate planning, and they're adding all kinds of other services. And so this is really, really changing the nature of the business, and what advisors are expected to offer and what advisors are expected to do. So all of those changes are taking place. So then, get back to your question then, what attributes, work in that kind of an environment? Well, first of all, you have to have a very open mind and expect change. As I said, it wasn't that long ago when you could kind of show up at work, week after week, month after month, and not think that much about it because there wasn't that much change happening. But now I think things have changed quite a bit, and so you need an open mind, and you can't just react to change. You have to really anticipate it. You have to
Mhm.
think about how you're going to deal with it as it happens. I think you also have to encourage your team, and this requires some change sometimes in the way firms are run. Encourage your teams to also participate in this process of looking outward and thinking about change, and really discussing change with them. And so where you may have had somebody who worked in the operations group or something and never really thought about things, those people are really important in terms of understanding how things get done, and they may have some ideas about how you could do things better or more efficiently, or they may run across ideas that you don't run across yourself. So having kind of putting your ego aside is really important. Letting other ideas filter into your organization, and even encouraging that is really important. And then you have to be very flexible. Obviously, in a way that maybe most people haven't had to be. I know in my career, things changed pretty dramatically as I was going through my journey, and I had to rethink things that I knew along the way, and take a different approach and not take the approach, well, in the good old days, we used to do it this way, and that's good enough. You really have to recognize, and again, keeping an open mind. Not every change is a good change, but they're changes you have to deal with. And so it's not, sort of suspend judgment a little bit and just recognize that the world is what it is, and you're not going to stop it from changing. So you need to be flexible and move with that. And also, I think a key attribute really is to not be afraid to fail. There are going to be things in this kind of an environment you can't help but experiment a little bit. You're going to have to try things, some of which are not going to work, and so you have to get past this idea that failure is a negative thing. Failure is just an experience you had that didn't turn out the way you wanted. It's not necessarily something that you need to hide or be ashamed of. It's something that you need to learn from. So get out there and not only yourself, but encourage your team to take chances and do things. I know at first Ascent we were doing new things all the time, and there were we fostered this culture of supporting people when things didn't work out the way we hoped. We've made an adjustment, and you just have to kind of create an environment where that is okay, because at the pace that things are changing now, there's no possible way to get everything right on the first try. You have to make adjustments along the way.
Yeah, and some of those ideas come from your customer base, right?
Yeah,
I mean,
absolutely.
I hear from advisors that, they were surprised when their client walked in and broached this subject with them or asked this question.
Mm-hmm.
I think one of the changes that are occurring right now and really should accelerate over the next few years is this idea of an expanded service model, especially in the area of financial planning.
Mm-hmm.
Can you talk about that a little bit?
Yeah, this is something that I'd been watching for some time, but it really wasn't until I left GeoWealth in January that I realized how far this is already going and how
Mhm.
fast it's happening. So what I was seeing was the move from advisor as investment manager to advisor as financial planner, right? That everybody's seen that. That's pretty straightforward. And then I'd started to see the beginnings of advisor as retirement planner, advisor as estate planner. Those you can see. There's a number of platforms out there now. Yours is one that helps with the retirement planning advisor, and those are starting to show up and become more a part of the world. But now there are platforms out there being built, whether you've seen them or not yet, and I think a lot of them are still in the garage being tinkered with, where pretty soon insurance and annuity products will be offered through platforms to advisors. They'll be able to access those pretty broadly. Same with a lot of banking services. There's still going to be some regulatory boundaries in some of these areas, but really, I think what's happening is the same thing that happened. I think it was back in 1906 or 1916. I think when Piggly Wiggly created the first grocery store. Where all of the things were under one roof, and before that, you had to go to the baker shop and the butcher shop and the farmer market and so forth to get all the things you needed. Now, what's happening now is this is starting to come together in the financial advisor world, where all of these different financial services, which we just take for granted as advisors, and members of the industry, we think, oh well, banking is over here and insurance is over there, and these things, accounting is over here. These things are all separate. But if you think about it from a client's point of view, they would like to have a Piggly Wiggly version of that, right? Where they could go to one place and get all the financial services that they need. And there have been some experiments with that in the past that didn't go particularly well. But I think the new version is, it's going to take a while for this to all unfold, but it's not that far away where clients will be able to access and advisors will be able to provide a whole range of services that advisors have not traditionally thought of being able to offer on their own. And so some of the, cultural boundaries between the investment people and the insurance industry, that these are going to have to get resolved, because from a client's perspective, the client doesn't care. They need insurance and they need investments. And so somebody's got to figure out how to do that. And whoever puts that piggly-wiggly infrastructure in place first is going to have a first mover advantage, I think.
Yeah, and I think it expands even beyond, where do we put our money?
Yeah.
It goes into more of the life coach field where
Yeah.
I see that especially in retirement income where, they want their advisor to help them with housing decisions and Medicare
Hmm.
decisions and
Absolutely.
how am I going to handle these RMDs? And, what about my legacy to my kids and my charitable giving? All of these, long-term care, all of these things are part of the overall plan in the client's
Hmm.
mind, right? So
Yeah.
they
Yeah.
don't want to have to go to different experts. They would rather consolidate in one advisor. The good news for the advisor is that if they can provide those services through their, network of experts and technology,
Yeah.
then they're going to get all of the client's assets.
Yeah.
And
Absolutely.
and they're going to retain those assets through the two generational transfers, right?
Hmm. Exactly. Yep.
So let's get back to pivoting.
Yeah,
I
sure.
know, I know you did a lot of pivoting at First Ascent. Can you give a
Yeah.
couple of examples of that?
Yeah. The first and most obvious thing we did there was introduce the flat fee idea. And that was just there were flat fee advisors at the time, but there were no flat fee asset managers at the time we did that. And I thought I was sitting around at one point thinking that really makes a lot of sense in the environment of a TAMP situation, where we're not really face to face with the client. The advisor's face to face with the client. Um, so we're just basically processing accounts and running the model portfolios. So it made sense to use the flat fee there, and so that was a major innovation, if you will. But we also looked at the time at the technology that was available for interacting with clients, and what we were really doing, and this is, I think, an important thing to take away from this conversation, is we asked the question, if our clients designed our firm, what would it look like? And not what we wanted to do, but if our clients were designing the firm, how would it look? And so one of the things we thought was the whole wholesaler on an airplane model just seemed archaic, given the technology that was available. And of course, right now we're proving how easy it is to communicate with each other through computer technology. But when we first started that, COVID hadn't hit yet. So everybody was still in offices, and a lot of the technology that we're using today and that we take for granted was relatively new. And so we thought, well, what we should do is just try to interact with the advisors that we work with more and more this way. And that way they don't have to, try to book meetings with us 3 weeks in advance, before we get on our airplane and fly out to see them. And, they can just kind of interact with us whenever they want to. And we can talk to as many more people than we would otherwise be able to. And so we introduced that idea of just really virtual interaction with the advisors.
Mhm.
And now that seems sort of laughable. Like, was that ever not a thing?
I know
But,
Zoom is a
yeah,
verb now. So
yeah, exactly.
yeah.
We also were very focused on client education. So one of the things that we thought about was the investment management world had progressed to a point where people were using terms like investment management is commoditized and so forth. I still don't really buy that characterization of it. You can see, people in the investment management business producing very different outcomes depending upon how they do their investments. So to me, that's not really a commodity. But the idea was to recognize that half of the equation is the investment management part of it. But from the client's perspective, there's a whole behavioral side of it, of keeping them in place and helping them understand what's going on and
Mhm.
preventing them from freaking out when market volatility comes along. So we've spent a lot of time creating materials and videos and so forth, and providing this information to the advisors we work with so they could educate their clients, not about how to invest themselves, but how to be good investors. So they could understand the world the same way, not exactly the same way, but at least partially the way advisors understood it, where the client would, after a certain point, the dream was the advisor would call the client when the market got volatile, and the client would say, I know, you're calling me to calm down. I'm already calmed down. You've already taught me how to do that. And so that was the point, was to try to help the advisor on the education side of things. So that was relatively new. And then we combined in our portfolios. At the time when we started our firm, there was kind of a religious divide between active management and passive management, which we thought was silly. And so we built portfolios that incorporated both of those, passive and active management. Again, today, that seems like, did people ever really think that way? But they did. And so we were trying to, to overcome that, what we thought was a kind of a silly divide between the active and the passive world. And and so it was things like that that we were doing, that were, just again trying to think about it from the client's point of view. What would they like? What would work for them? What would actually help them? And I think it's something that everybody should. It's an exercise everybody should go through. They should sit in a room with their team and say, forget what we can afford to do. Forget anything about scale, or put all that stuff aside. Just if our clients could build the firm, what would they build? And then discuss that and see what it looks like, and see how different it might be in certain areas from what you're actually doing. And sometimes, you can't really afford to do what clients would want you to do, or you may not be able to do it at the scale that they'd want you to do it. But you're bound to get some ideas about how you can improve what you're doing by thinking about it totally from the client's point of view. And it's easy, because everybody's so busy and there's so much to do. It's easy to stop thinking about that. Once you push the go button and your business, is moving forward. But it's an exercise that we did, fairly frequently, I think, asked that question and got together as a team and came up with a lot of good ideas about how to improve what we were doing, I think, from that perspective.
Yeah, that's awesome. I love that approach. I think, that's where one of the areas that technology can help out. So
Yeah.
you built a whole platform around educating the clients on investments, and I think today's consumer wants to partner with advisors versus going to an advisor and being talked to as the
Absolutely.
expert.
Yeah.
They want to be involved,
Mm-hmm.
and good technology will involve them in the process, versus, we're going off to do all the work in the back room, and we'll put a
Mm-hmm.
report in front of you.
Yeah. Here's your 100-page report.
Yeah,
Yeah. It tells you.
exactly. And
Yeah.
then explain it to you, and we'll give you
Right.
5 minutes at the end of the client meeting to ask
Right.
questions.
Right. Yeah.
You
No,
know,
exactly.
I mean, don't be afraid to open up and partner and investigate, and good technology will help you do that, especially, in a virtual environment, right?
Yep. Yeah, absolutely. It's really important to involve clients in the process, because the old days when you were the gatekeeper to information and to product is long gone, right?
Yeah.
Clients can get any information that you can get, they can get it too. And pretty much the same with products. So they can go out and do research, they can go out and get product, those things are just fundamentally different than the way the world used to be. And so you have to be the expert and the coach and the person who knows how to guide them through all of that information, and who has the tools, primarily technology tools, that will help them see how it all works together, and grasp and understand what they're doing, so that they really, when things do get bumpy, which they always do, they understand how the recipe was, developed, and how the cake was baked. And I think it makes more sense to them, and they
Sure.
are better able to stay in place and do what they need to do to get to their goals.
Well, there's less fear and anxiety, right?
Yeah. Yeah. Yeah.
when you understand how the cake is baked.
Yeah, absolutely. Yeah, I mean, the more I learn about how airplanes are built, the less I worry about turbulence,
Yeah.
because I know that you could basically bend the wings of an airplane, over the top of the airplane and have the tips touch, and the thing would still, be fine. So anyway, it's that sort of idea, that if you don't have to turn them into investment management experts, but they have to. There are some basic fundamental principles which, if they understand, they can be much better clients and much more at ease with the world as it unfolds.
Yeah, and that's a skill I think, to develop throughout the whole team when they're interacting with clients, keep it
Yeah.
simple and,
Yep.
understandable.
Yep.
You don't have to throw out all these technical terms that are going to confuse people.
Right. Yeah.
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 So
That
we
was
do
one of the
have
things that. Yeah. Go ahead. I'm sorry. Go ahead. Yeah. I was going to say
oh,
your theme of simplicity is really important. This was something that we
yeah.
did at First Ascent that I think made a huge difference, and that was. This was in the client onboarding process. We developed our own technology in that area to facilitate the opening of accounts and onboarding of clients. And we made it really, really simple. At the time, the robo advisors were coming out with all this cool technology, but it was kind of complicated and you needed
Hmm.
to learn how to use it and so forth. But we designed a client onboarding tool that anybody could use. You could just, like, we would just say, go to the website and click on client onboarding, and you don't need any instruction. You can just onboard accounts in 5 minutes, and that's the sort of mindset that you have to have these days, I think, which is to make things very simple and easy so that people can understand uh,
Hmm.
what's involved and what's required. And the day of baffling them with all your great jargon and charts and graphs, I think,
As their
is
eyes
kind of,
glaze over.
yeah, it's kind of past. So anyway,
Yeah. Well, we do have one question
sure.
from John. Do you see the AUM-based revenue model going away for advisors? And if yes, what do you think replaces it?
Yeah. The answer is no, I don't see it going away. I see, and you can see this today, there are more revenue models than
Mhm.
there were. Certainly, there were no flat fees and there were no subscription fees and there were no hourly fees, in the early days. And then, Cheryl Garrett and her group, came along with the hourly fee idea, and the flat fee, followed, and so forth. So I think what you'll see is just you'll see multiple versions of fees offered.
Mhm.
The AUM model has its advantages for advisors, and it has its critics, and there's some downsides to it as well. But all of there's no perfect fee model. Everybody wishes they could find the perfect model. But I think what you should think more about, what, again, going back to this the same topic here, think what your clients would want. What would work best for them. Sometimes it's a flat fee, sometimes it's an hourly fee, sometimes it's an AUM fee. I think it's very common these days for advisory firms to have multiple
Yeah.
fee
Yeah.
schedules, and for different types of clients and different types of services, I think it makes sense. So yeah, I don't think it's going away, but it'll become part of the mix. It will remain a major part of the mix for a long time. I don't think it's going to drop down into the less than 50% range for quite a long time. I think advisors will continue to use it, but there are other useful fee schedules that you can use depending upon your target market and what services you're
Yeah.
providing.
Exactly. I love tying it back to, what the client feels comfortable with and what
Yeah,
service levels you're providing to them. Ryan has a question. This is $1 million one.
sure.
What do you feel is the optimal tech stack with all technologies present? What are the leading techs and ones to focus on moving forward?
Oh, wow. So this is a really hard question because this is one of
Yeah.
the areas where things are changing very quickly, right? So technologies that were kind of leading edge technologies even 3 years ago are starting to be kind of the legacy technology. They're sort of fading out. And another thing is happening, which is you're seeing more firms try to build a unified tech platform. So I'll just you've seen this with InvestNet, you've seen this with Orion, trying to build technology platforms that include kind of everything. Um,
Hmm.
I love both of those companies. I have, friends there. I don't think they've quite pulled that off. They've acquired a lot of firms, but integrating firms is a really hard thing to do, and I don't think they've quite got that formula down yet.
Hmm.
Advizon is a newer firm that's actually, I think, because they're newer and they started from scratch and they built everything native. I think that's a firm to look at. So, these are firms that are trying to think of all of the what all pieces of technology would be, and then integrate with those parts that they don't have themselves, because they're not literally trying to build everything, but they're trying to.
Yeah, and I think we're seeing more technology partnerships where
Yep.
it's not just the single platform, but you get the power of multiple platforms through the integration.
Right.
So
Yep. Yep.
depending on what the client requires, whether it's planning or investment
Yep.
management or whatever, or
Yeah.
insurance, the integrations between the specialty platforms, I think is really becoming very powerful.
Yeah, and this is a challenge that those who are trying to build the unified platform will always face, and that this I've seen this for over 30 years now. It's just and it will never go away. I think advisors are just not going to some advisors are not going to buy the unified platform. They want to build their own tech stack, and they have pieces of technology that they love, and they're not going to give them up. And so you can you can like that or not like that, but they're going to build their own tech stack, and they're going to integrate as much as they can those pieces and the technologies that they really depend on. So you'll get this kind of world where there are platforms that are full service integrated platforms, and then this other group of advisors that'll build their own. So fortunately, the world is accommodating both of those right now. So
Yeah, and I think part of the whole pivoting concept is having the mindset to replace technology when
yeah,
something else better comes along that suits your service model,
yeah,
and your strategic plan. Because, too many advisors say, oh, we've been successful with this technology stack for 20 years, what
hmm
should we change? But for all the reasons you gave them, they
yeah,
need to be on the lookout for new technologies. And Kevin has a question. This is
sure,
very broad. What about AI, and how AI can be used in practice? I mean, we could go on for hours around
yeah,
that because it's such a broad topic. But any particular
yeah,
thoughts about that?
yeah. I mean, I think so. Um, I've read a lot about AI, and the people that know a lot about AI, the people that develop AI, are all over the map in terms of where they think it's going. Some people think it's going to be the savior of civilization. Other people literally think it's going to end, humanity at some point. That AI will do something nasty to the human race. But so those kinds of big picture questions, I don't really. I have no insight into, but just in terms of content creation, in terms of
Mhm.
like I needed an illustration for a LinkedIn post that I did the other day, and I went on AI and on Copilot that I have on my computer, and created the illustration that I needed in just minutes. And so there are all these kind of smaller uses that where you can control the outcome, where
Mhm.
if the content that comes to you isn't quite right, you can send it back to the AI to fix it, or you can edit it yourself, or you can do what you want. The bigger questions, like will AI ultimately figure out how to manage portfolios, that's that's a little above my pay grade. I have done some research on it, and so far there hasn't been a good outcome there.
Yeah.
It's mixed. It's sort of what you'd expect, right? Sometimes it gets it right, sometimes it doesn't get it right. But overall, AI still has a long way to go before it becomes your preferred portfolio manager.
Yeah,
So
and it's to that point. I mean, there's AI in the simpler fashion where advisors can adopt note taking and,
Right.
customization around client behavior and
Yeah.
preferences. But then we go deeper into the machine learning world.
Hmm.
And machine learning in AI depends on certainty and sort of a predictable model. And, maybe we can end up with, um, looking at in this world of uncertainty right now, what advice would you give to advisors? Because we're a little bit over time. I could go for hours with
Yeah.
you,
Yeah.
Scott.
No, you could go. It's really, so to me, it's really, the world is uncertain. When you look out, there's all kinds of people making all kinds of predictions about things. I would listen to those, but not put too much weight in any one of them. And I would develop a mindset, your own mindset of being curious, reading a lot, trying to understand as much as you can, think about where things are going, develop interactions. Study groups are great. Talk to other advisors, talk to your team, talk to your clients. Just really like bring the information, get the information flowing to you so that you can try to understand where things are opening up for you in your practice. Because things, everybody's practice is a little different. Everybody's client base is a little different. And, the sort of big guru statements about, what the world's going to look like are all well and good. But, you have to tailor all of what's happening to your own situation. So it's this,
Mhm.
again, it's this process of keeping open mind, involving the team, involving the clients, getting as much input as you can, and then not being afraid to experiment and to sometimes get it right, sometimes not get it right. I think that's all you can do with it.
I love it. And it certainly worked for you.
Yeah, yeah. So far, I mean, the one thing I think the one thing I'm proudest of all that is that I learned to not be afraid to fail. That was the thing that allowed me to do a lot of the things that I did. I just didn't care anymore. It just didn't bother me to fail, and so as a result, you go out there and you try things, and sometimes you do fail, but a lot of times you don't fail. A lot of times you really do kind of get it right, and you have to tweak and adjust and so forth as you go. But if you get out there and step boldly into the world and do what you think the right thing is, you'd be surprised how many times you get it right.
Well, that's what trailblazers do.
I guess that's right.
Well, thank you so much, Scott. I really appreciate your coming on
Sure.
with us and sharing your wisdom. And thank you all for joining us with our discussion with Scott today.
My pleasure,
And be
Cheryl, and
on the
thanks to
lookout,
everybody who's out there. Yeah.
and be on the lookout for our next Trailblazer webinar in August. Take care.
Bye, everybody.